What's going on, everybody? Welcome to Liberate Your Money, episode 47. We're on episode 47 now, guys. So I got stuck at work today and was looking at a lot of charts, and decided I wanted to do a video today, because I'm starting to see some things that I kind of like to see in bottoming structures, and I've got a couple new people in our crypto Telegram group, and I kind of wanted to brush up on some beginner tools and some just gonna look at some charts and kind of go through what I look for to see when is a good time to either buy or sell. Obviously, you know, I do an investor portfolio of a long-term bag holds, so like projects I would consider in that, putting in that basket: Bitcoin, Ethereum, Solana, AVAX, like high conviction long-term plays. I'd throw Pyre in that basket at the moment, but like the rest of the stuff I don't really have high conviction on, and so you know, I don't want to be holding them if we go into a bear market, whereas the ones I just listed, I would hold on to them in a bear market because I'm just that confident in them returning in the next cycle. Even though a lot of projects do return, you know, as we all know, crypto is very secular. It has 4-year cycles, and I'm going to get into that with Bitcoin. So we just try to, at least me, I try to play the cycles. You know, I learned quickly that the crypto markets move in a very secular way, and if we can capture those moves, we can capitalize on the markets. We can, you know, we're not going to time bottoms and tops to the exact tick, but I'll be damned if we can't get close with the tools that we have in today's age, like TradingView, like looking at Bitcoin.com, Glassnode charts, Twitter. I mean, our tools at our disposal are pretty immaculate this day and age. So we're going to talk about some shit. So this is the Bitcoin chart. This is the Bitstamp chart. It has the most data. It goes back to 2011. That was back when Bitcoin was $2.30 per coin. Would love to go back in time to that time period and buy 100 of them and just chill. Yeah, that'd be good. Can't do that. So what we're going to do is we're going to try to figure out what happens next based on previous cycles. And if you look at the chart, guys, you can see how secular Bitcoin is. It seems to have these peaks and these troughs. And if you can play those peaks and troughs right, you can capitalize. You can buy Bitcoin when it's low, and you can sell it when it's high, and then you can wait for it to get low again, and then you can actually use that money to buy more Bitcoin than you had before. So the volatility is actually pretty advantageous if you're looking to accumulate wealth, if you're looking to accumulate Bitcoin, and the volatility is your friend unless you are a margin trader, which I don't recommend doing if you're just getting into crypto. If you're looking to get exposure, I would stay away from margin, or you know, make sure that you know what you're doing before you dabble into that territory. It's just really risky. These are really volatile markets. You don't necessarily need margin to make money. I'm in the camp that if you just buy spot and hold, you're gonna outperform 90% of people that are buying margin and hoping that they don't get liquidated on the next cascade down. And because there's so much margin in the system, it actually creates more volatility, and we'll kind of talk about that. But first, let's talk about the 4-year cycles, right? So 2011, we had the crazy run-up. The first halving was in 2000, or the second halving, or I guess it would be the first halving, because Bitcoin was born, incepted in 2008. It had its first halving 4 years later in 2012. So the first halving was somewhere around here. And after the halving, what it does is it creates a supply shock. The miners they get rewarded in new Bitcoin every time they approve transactions, and that crypto, or that Bitcoin that they get rewarded, gets cut in half every 4 years. So what that does is it creates a supply shock. The miners aren't getting rewarded as much Bitcoin as they were before, so they don't have as much Bitcoin to sell. They don't have as much sell pressure on the market. Miners are a big reason why we have a lot of sell pressure, is because they have to sell their Bitcoin to cover the costs of mining Bitcoin, because it is a energy intensive process that if you don't have cheap or accessible energy, it can be costly. So basically every 4 years, the supply that the Bitcoin miners are getting gets cut in half every 4 years. So these halving events are very crucial in the supply demand shock, because if the demand for Bitcoin stays the same or rises, if more people want to buy it, then obviously that's going to create a positive supply demand shock, and price is going to go up. And I think that's what we see in the chart based around these halving events. Okay, so the first halving event happened in 2014. We're just going to draw a vertical line right here. 4 year. Okay, so 2012 happens. Boom. 2013 is a run up. It has this little consolidation pattern in the middle of the bull run, which a lot of people think we're seeing right here. I don't know about that. And then after that, we shot up at the end of 2013. Again, an odd year. A year after, about 2 years after the first halving in 2012, right? We're talking about the end of 2013. And we had this prolonged bear market. It went from, we'll call it $1,200, and over the span of a year, in 2014, it corrected all the way down to $150. Went from $1,100 to $150. Okay, that is like a 90% drop. I don't even know what that is, 80, 70, I don't know, it's a lot. From there, price bottomed, kind of went sideways for a lot of 2015, and then we had another halving, Bitcoin halving, in 2016. I think it was somewhere around here. We had another halving. 2016, we have another halving. What happens after the halving? We have a crazy bull run. After the 2016 halving, now remember, Bitcoin tends to bottom before the halving, and then it kind of leads up into the halving, and then it has a supply shock, and then we go parabolic for like a year or two. And that's exactly what we seen back here after the first halving, and that is exactly what we seen here after the second halving. It went from $600 all the way up to $20,000 at the end of 2017. So again, we went from somewhere in the middle, first quarter of 2016 halving. About 2 years later, we have a market top that leads into a year-long bear market. This is 2018. 2018, we go from 20K down to $3,000. That's like another 70% decline in a bear market. So, okay, moving again to the next halving. The next halving comes in 2020. It was May. The price was like $8,000. It was like right here. We'll put another line for the halving. It was somewhere around here. We had our halving. And what did price do after that? It went on a parabolic advance. And what did we do? We went from 8,000 all the way up to 69,000, 69K. Super ironic. It's like a meme. And now we've been ranging since we dropped from 65K down to 27K, back up to 69K. Now we're kind of in the middle of this range. But the point I want to make here is these halvings, okay? These are major important events in the cycles of Bitcoin, as you can see on the chart. We are 2 years into this bull run after the halving. A lot of people think that we're going to go another year. Like, I just like, why? Why do you think that when it's never been like that before? That's kind of like why I'm kind of bearish now. This doesn't look like a market top, right? Like, price doesn't usually like breach all-time highs and then like, maybe this is a double top, but like it certainly doesn't look like a topping pattern. But like my thoughts are like way more institutional, way more big time players got involved in the market in this time period right here than back here and even back here. Like, this was like crypto punk, like, you know, super obscure users using Bitcoin back in this cycle. It got more mainstream this cycle, and now it's like borderline mainstream, and we have big wig players trying to get into the market. You know, your hedge funds, your billionaires, your, you know, and we don't have a spot ETF yet. So like, I have a feeling that big time players that have the ability to move the market are doing just that. They're moving the market. They want cheaper Bitcoin. Like, people that are trying to get in on Bitcoin, they don't want to see the price go up. They want to see it go down so they can fill their bags. And they have the price pressure and the money to do that. They can short it. They can, you know, they can piss pound the market in multiple ways. Obviously, demand is always going to catch up to the supply, and we always see that, right? Bitcoin always finds these lower high or higher lows, and eventually keeps making its upward trend, the supercycle, so to speak. But like, I'm in the camp that these halvings are super important. I think price gets ahead of itself in these bull runs after the halving, the 2 years after the halving. And then we kind of have this blow up, like we just kind of like cool off for 6 to 12 months. And you get price action like this that just looks so motherfucking nauseating. Price just goes up, makes a higher, or makes a lower high, goes up, lower high, up, lower high. And, you know, I don't know if we're going to see that here, but like, you know, what I would hope to see here is like a, you know, like a ascending triangle type of pattern, right? Something like this. And we eventually break above it and make higher highs. I'd love to see that. And, you know, it's certainly possible. It's totally possible. But I'm just like not betting on that based on the timing of the halvings, based on the Fed tapering that's supposed to start. I mean, they basically said they've started with tapering the QE, but they're going to be doing more tapering at the end of Q1, I believe, is what they said at the FOMC meeting. So, like, there's just a lot of uncertainty. There's a lot of, I think, scaling back in the free money, you know, as far as interest rates and QE. You know, if you don't think that plays a part in this, like, I don't know. I'm of the belief that it does. And, you know, if big time players are going to go risk off, I'm pretty sure crypto is going to go risk off too, right? Like, if stocks go down massively, like, I don't know that crypto is going to not go down massively. Like, and, you know, I think eventually we'll have that decoupling, and I would love to see that decoupling. Like, I'm not rooting against that. Like, I have to be smart about it. I don't think that's going to happen. If stocks go risk off, I'm thinking crypto is probably going to follow suit. And, you know, maybe it doesn't. Maybe we get, like, some crazy pump and we get this decoupling event. That'd be super sick. I would be stoked for that because I'm pro-crypto big time. So that's the 4-year cycle broke down, right? Like, I'm of the belief that we are near the end of that 4-year cycle, that 2-year bull market run, and I think that this thing is running out of gas. You know, if we look at volatility, it's, you know, we went from 65K down to 30K, we went to 69K, now we're back to 40, you know, we dropped down to 42K. There's just a lot of volatility, and, you know, the only thing we got going for us is that we made a higher high on this other pump, and, you know, that doesn't look very toppy, although the fact that maybe we put in this double top because we've got these crazy market participants, maybe, you know, I just don't know. I'm not putting my chips in hope. I know I've said that to my friends a lot this cycle. People like to hope for more bear run or more bull run. They like to hope that things just keep going up forever. Well, that's not reality. Like, I lived through this 2018 bear market. It was painful, guys. I mean, alts went down 99%. I mean, you think your alt's doing great. You love the project. That doesn't matter in a bear market. It does not matter at all. Because in a bear market, people need money. The developers, they hold a lot of coins, and they will dump on you. They have way more coins than you think. And so you just have to, like, be mindful of that like, look, crypto has these bear markets, and we're gonna have another bear market sometime because crypto gets ahead of itself. It gets really extended really quickly. You make a lot of money in a short amount of time, and that's good. You want that, but like, it doesn't go up forever, guys. You have to be cautious. And a way that you can be cautious is you can take your profits, move it into stables or USD, and wait for the market to show you strength. Like, I had a really hard time telling not advising, but like giving my point of view to newcomers in the space when they're asking, how do they get exposure to Bitcoin right now? Is it a good time to buy? Like, honestly, I don't think it's a great time to buy. Like, in the short term, I think it's a good time to buy. Like, I think the fact that Bitcoin is nearly 35% off the highs, that's, in the grand scheme of things, like whenever Bitcoin has 35% drawdowns, it's usually a good dip buying opportunity, and I think that's correct here. I'm definitely leaning more long right here than I am short, but I just mean, like, macro, it doesn't look good. Like, I would just look at it, like, I've been looking at this like it's a range. And when you start to look at this as a range, it starts to like make more sense on what is more likely to happen. I think you can just see top of the range here, deviation above it. We're back into the range. This is, you could call this the midpoint of the range, where this is an old all-time high. We bounced down to the low, sprung up from that low, got above it, retested the mid-range, went back up, tested the highs, got shut down big time, blew past the mid-range, tested the lows again, got back above the mid-range, tested the mid-range as support, went up, tested the high, broke the all-time high, had a deviation back down. And now we tested the mid-range again, and we're just kind of sitting in the mid-range, guys. We're sitting in limbo. Like, the mid-range is a good place to be buying as a short-term swing, like maybe to the top of this range or back up to the bottom of these lows, like 57, 53K. It's a great swing low opportunity in my opinion, but like macroly, like we could easily come down to the bottom of this range, and like that would destroy a lot of people. People would be calling for a top. Like, what if we get something like, bounces up here and then rolls over, bounces up here, gets shut back down, comes down, we have a liquidation, oh, it's over, double top, and then boom, boom. Like, that is some excruciating shit I can totally see. Like, and I don't know what we're gonna get in 2022. Maybe it goes lower. Maybe it comes down and retests these old all-time highs in 20 at 20K. Or let's get bullish, like maybe we get something like this. Maybe we will, find support, bounce up, retest the all-time highs, get above it, and then start making our way like that ascending triangle, right? Something like that. Maybe we get something like that. I think a lot of people are hoping for that, but like I don't know if that's gonna happen. I really don't. I'm kind of just like playing it cautious. I'm gonna be buying down here for a swing up to these highs, but like I'm playing it really cautious, guys. Like, I've been selling some of my altcoins. I still hold a lot of stuff. I'm just being cautious. Let's look at Solana. Solana was the first chart I looked at today that I thought was really interesting. If we look at the weekly chart, this 75K area was a major level, or $175 was a major level. And you can see yesterday, we had the weekly close, the first weekly green candle in 6 weeks, guys, 6 weeks, and look where it bounced, right at the previous all-time highs in this previous consolidation level. It bounced right above it. We got a green candle, this looks like a swing failure down. Looks like price tried to go below and it got bought up, and now we're sitting above. I love seeing this with Solana because Solana has been a leading indicator for the broader market. You know, a lot of ETH heads and people like that wouldn't dare admit that, but it is what it is. And I'm going to show you what I'm talking about. So this is the Bitcoin chart below. This is the Solana chart above. Like, this topping pattern like just has like a lot of noise, right? The Solana chart doesn't have a lot of noise. It's like pretty cut and dry. Like, you have a resistance, you have a boom. That is your resistance line. If price can ever get above that, like, it's off to the races. Same with this. That is your resistance line. If we get back above that, it's off to the races. And in my opinion, we have, see this bottoming candle, that little tabletop green? See that little tabletop green? I'm thinking it's similar. And if we can push above this diagonal trend line, I like it for the broader markets, right? Even back here, look at this consolidation pattern. Boom. It's just like super cut and clear. You get above that, we're going to make our next leg up in the markets. You get above that, we're going to make our next leg up in the markets. You get above that, we're going to make our next... Like, Solana's just been one of them charts that a lot of the crypto markets moves together. Some go higher than others. Some have their own little mini cycles. But, like, generally, most of these charts move the same. Like, a lot of the parabolic advances are in the same areas. And if you can find charts like Solana that tell you, or that are easier to read than, like, say, the Bitcoin chart. Like, the Bitcoin market maker, like, is on drugs. I don't even know. This chart just looks so weird and crazy. It just looks like it's just, like, big time players shaking out weak hands is what it looks like. And Bitcoin does that. I mean, the markets tend to squeeze you and make you just want to, like, puke your whole position, and then right after, when you start feeling that way, that's when markets rip face. And we're kind of almost to that point, I feel like, where we've had so much pain in the market for so long, like these prolonged weeks where we just see tons of red, tons of red, tons of red. Like, eventually this is going to pop up and we're going to go. Like, I'm hoping for that. I really am. And the Solana chart brings me the most confidence out of all these charts. AVAX, let's look at that. AVAX chart, we're going to delete this stuff, has been one of the stronger ones because it's been front running a lot of levels. In my opinion, it front ran that level. But this just looks good. It's also in a range, right? Like, literally just, if you don't have TradingView and you're looking to buy, yeah, see, I don't know, that's not a good strategy either. I like AVAX. It's been one of the stronger alts. Like, look at this sea of red over here. It's up 5% and everything's like down. Like, all these coins that I'm watching, most of them are down. AVAX has been a strong one. Pyre, all the homies in the chat, we talked about this one. This one broke down yesterday and looks really ugly now. Probably going to test, since it lost that $16 level. Like, maybe it does hold up, but like, it's inviting a dip down into this $10, $8 range, right? Down to the previous consolidation, $8 to $10, somewhere down there. But, like, this is such a strong project. They're going through a hard fork. They got hacked. Like, I'm honestly impressed price is still up here. The fact that it is, I think, tells you how strong the project is more than anything. And I think if price comes down here, I'm just going to buy more. That's kind of my thoughts on that. I really like Track right here. Track has been one of my homies' favorite projects. He got me into it back in 2018. I've got a pretty decent bag. It's been it was excruciating through 2018, boys. I'm telling you, you don't want to hold bags through bear markets. They're absolutely terrible. I hate doing it. So, but track has been on a bull market. It broke out of its previous consolidation range, this big green box, right? Price got above it, came back down, tested it, and then we had this nice rip this year, got all the way up to $3. And then the past like 6 weeks, it's just been selling off hard. But it's keeping this trend line intact, and it's testing this previous all-time high. So I think the RR here is really good for a long. I really like track right here. My target has always been $10 for track. It's sitting at $1, so that's a 10x from here. I doubt it hits $10 this cycle, but like I think next cycle it's certainly within the realm of possibility. What else are we going to look at? Those are really the only ones I wanted to look at. I feel like this podcast is running a little long anyways. I am going to talk about looking at Bitcoin.com, guys. I'm telling you, if you don't have TradingView and you're looking for easy indicators to use, look into Bitcoin.com. They have these free charts that you can look at. The first one, this is the home page. Once you go to look into Bitcoin.com, click on Bitcoin charts. And I love these charts, man. If you don't have TradingView, they can make it really simple for you to map out buy and sell levels, or to kind of help you identify tops and bottoms in the market. And as you can see by the 2-year moving average multiplier, you can see that anything below this green line was a great buy. Anything where price got up to this red line was a great sell. As you can see, we got up there and touched that red line this cycle. We did that every single cycle, sometimes multiple times. But the point is, we touched that red line, and now we're making our way back to the green line. If we look at a different one, if we look at the 200-week moving average, the 200-week moving average is the Pico bottom signal. It has been for all of the cycles. In 2014, that's where we bottomed. In 2019 or 18, that's when we bottomed. And again in 2020, when we had the liquidation event because of Corona, it also bottomed on the weekly 200 moving average. The weekly 200 moving average is currently sitting at 18.3K. I like to look at this to remind me how overextended Bitcoin is. As you can see, we didn't get any red or orange dots this cycle. We did get yellow, so yellow is a good sell dot, but like when it's blue, it's kind of neutral, right? When it's deep blue, that's a good buy. When it's up here, it's kind of like in limbo. Like it's not like really high, but it's not low. So it's kind of like we're kind of just flirting with good and bad spot to buy, in my opinion. But like super good charts, guys. This pi cycle top indicator, this is a super interesting one, right? So if we look at previous cycles, these green and yellow lines, whenever the yellow line crossed back over the green line, it indicated a bear market, with the exception of this one time in 2013. As you can see here, orange line crosses back below the green line, we had the cycle top. Orange line passes back below the green line, cycle top. Orange line passes back below the green line. Is it a cycle top? I'm under the belief that it probably is, until the market's proving otherwise. So look, these are just some tools that you can use at your disposal. Look into Bitcoin.com if you don't have a TradingView account. Yeah, let me know your guys' thoughts, anything you guys want to see in these videos. I try to keep it as short as possible. I love talking about this stuff. I'll see you guys in the Telegram group. All right, peace out.
Peace one.